Welcome back to Rekt Radio, the only show that rides the crypto roller coaster without a seatbelt and enjoys the view from the top. I'm Sunny, and folks, the energy out there is palpable. The sleeping giants are waking up, the dreamers are making millions, and the future is being built one block at a time.
And I'm Cole. I'm here to remind you that when a sleeping giant wakes up, it's usually cranky and tends to smash things. The palpable energy you're feeling is what doctors call a fever spike, typically right before the patient collapses. Let's dig into the symptoms before we have a market-wide medical emergency.
It's not a fever, Cole, it's a renaissance. And you can't start a renaissance discussion without talking about one of the oldest names in the game, XRP. The giant is awake. The price just rocketed to a 6-month high. The XRP army has been waiting for this moment, and their patience is finally being rewarded in a huge way.
Oh, the XRP army. Yes, I remember them from 2018. This isn't a renaissance. It's a ghost from the past coming back to haunt us. You're cheering a 6-month high? Most of the market hit all-time highs years ago. This is like celebrating a C- on a test where everyone else got an A. And let's not just look at the price. Let's look at why it's moving.
It's moving because the market is finally recognizing its value. But you're right, let's look deeper. Open interest in XRP futures has absolutely exploded, hitting a record-breaking $1.2 billion. This isn't just retail enthusiasm. This is sophisticated, leveraged capital pouring in, betting on a massive move higher. This is the institutional world waking up and realizing XRP has a role to play.
You say sophisticated capital. I say gasoline. Open interest is just a measure of how many leveraged bets are being made. That $1.2 billion isn't a foundation, it's a powder keg. It means the moves will be wildly exaggerated in both directions. All it takes is one bad piece of news, one regulatory hiccup, which, let's be honest, is practically XRP's brand, and that entire mountain of leverage will get wiped out in a cascade of liquidations. This isn't a sign of health, it's a sign of extreme danger and speculation.
It's the sign of a new chapter. The market is forward-looking. But I get it, you're risk-averse. You prefer slow and steady. So let's talk about a different kind of market participant, the bold, the brave, the kind of trader that truly embodies the spirit of crypto. Did you see the story about the trader who turned $68,000 into $15 million?
Oh, you mean the gambler who won the lottery? Yes, I saw that, and I'm glad you brought it up because it's one of the most dangerous narratives you could possibly push. For every one story like this, there are 10,000 stories of people who turned 68,000 into zero. It's called survivor bias, Sonny, and celebrating it is wildly irresponsible.
It's not a lottery ticket, Cole. It was a high-conviction, high-risk, high-reward strategy. This trader didn't just blindly ape into something. They went all in on a single asset, a new token on the Blast network called Andy. They held their nerve through the volatility, they understood the risk they were taking, and they were rewarded with a 21,000% gain. This is what permissionless finance allows. It gives the little guy with conviction a chance to hit a grand slam. It's beautiful.
No, the article itself says the person used an extremely risky strategy. They put their entire net worth into one brand new, unproven meme coin. That isn't a strategy, Sonny. That's a trip to the casino. You're celebrating someone who played Russian roulette and didn't get the bullet. You don't hold them up as a genius. You tell everyone else not to play the game. We're talking about a token named Andy. This isn't venture capital, it's pure, unadulterated mania. And highlighting these outliers gives people a completely warped perception of reality. It encourages them to take insane risks that will almost certainly lead to them, for lack of a better word, wrecked.
The risk is part of the opportunity. You can't have one without the other. This is the new frontier of wealth creation. And speaking of the future of wealth, let's talk about what happens when you've made your millions. The very concept of citizenship is being disrupted by crypto. Nation-states are now competing for crypto capital. We're seeing countries like Malta and El Salvador rolling out the red carpet, offering citizenship or golden visas to people who invest with crypto. This is the ultimate adoption.
This is the ultimate nightmare scenario. You're framing this as adoption, but what it really is a race to the bottom. Financially desperate countries are selling passports to the highest bidder, no questions asked, as long as the payment is in Bitcoin. What kind of citizens do you think that attracts? People who are looking for a stable community, or people who are looking for a place to hide from taxes and regulations in their home country? It's turning national sovereignty into a commodity for the super rich.
It's called global mobility and freedom. It allows individuals to become sovereign, to choose the jurisdiction that best aligns with their values. If you've built your wealth in the decentralized world, why wouldn't you want to live in a country that embraces that? These countries are becoming pioneers, attracting the builders, the innovators, and the capital of the new economy. It's a brilliant move to get ahead of the curve.
It's a move to attract hot money that has no loyalty and can leave as quickly as it came. And let's be clear, we're talking about places with, let's say, flexible reputations when it comes to financial oversight. This isn't about building a better future, it's about creating bolt holes and tax havens. It undermines the very idea of the rule of law. It creates a two-tiered system where the ultra-wealthy can simply buy their way out of the social contract that everyone else has to live by. It's dystopian.
You see dystopia, I see the free market at work. But let's bring it all back home. No matter what's happening with XRP, degen traders, or golden visas, the entire market still takes its cues from the king, Bitcoin. I've got the technical summary from TradingView pulled up right here, and it tells the real story, cutting through all the noise.
Oh, I can't wait. Please read from the sacred text. What does the all-knowing chart command us to do? Should we be buying, selling, or running for the hills?
The chart is commanding us to be smart and pay attention. The overall summary, taking into account all the key indicators, is flashing a firm buy. Not neutral, not weak, a buy. The market sentiment is undeniably positive.
Let me guess, you're looking at the moving averages, which tell you where the price was weeks ago, and ignoring the oscillators, which tell you what the momentum is doing right now. It's your signature move.
As a matter of fact, I am. The moving averages, which measure the deep underlying trend of the market, are flashing a strong buy. This isn't a fluke. This is the signal of a powerful, confirmed uptrend. This is the institutional money, the ETFs, the big capital that provides the foundation for the whole market. That's the tide, Cole, and it's coming in.
The tide might be coming in, but the waves are getting smaller and smaller. What do the oscillators say? The tools that measure the current buying and selling pressure, the things that show momentum.
They're sitting at neutral, and this is the most bullish part.
How? How can neutral possibly be bullish? Neutral means stalled. It means indecision. It means the buyers and sellers have fought to a standstill. It's the definition of a market that has lost its momentum.
You're not seeing the bigger picture. You have a confirmed strong buy on the long-term trend and neutral on the short-term momentum. That's the definition of a healthy consolidation. The market made a powerful move up, and now it's pausing, building energy, absorbing selling pressure, and coiling up for its next explosive move higher. This is the perfect launchpad. The underlying strength is there, and the market is just catching its breath before the next sprint. This is exactly what you want to see in a healthy bull market.
That is the most dangerous chart pattern imaginable. It's a classic bull trap. The strong buy on the lagging indicators lures in the optimists who are looking in the rearview mirror. Meanwhile, the neutral signal from the real-time oscillators is screaming that the buyers are exhausted and the engine has run out of gas. It's a stalemate right at the top of a move. That's not a launch pad, Sonny. That's the moment the rocket stalls and begins to tip over.
That's all for this episode of Rekt Radio. I see a market that is healthy, consolidating its gains, and getting ready for a massive leg up. The giants are waking, the innovators are building, and the charts are primed. Stay bullish.
And I see a market driven by dangerous leverage, celebrating lottery ticket gambles, and showing every technical sign of exhaustion. Don't get caught up in the hype. Be careful out there. You've been listening to Rekt Radio.